Hello and welcome back, everybody, to another live stream. So it is Wednesday, the 19th of June. So again, we are halfway through another week. These weeks have been going very, very quickly recently. But yeah, of course, what I will start off with is that in America, there is a holiday going on, as I understand. So yeah, the markets today are very quiet because we are not seeing that volatility in the markets at this moment in time. So yeah, I'm going to actually try and keep the stream a little bit shorter than usual, just because nothing has really changed since yesterday, since the stream yesterday, right? So yeah, I want to kind of give this live stream to you guys, really, and just give you the time to of course, ask me anything that you want to ask me. If there's anything that you want me to go over, I will happily go over it. So yeah, of course, make sure that you do put any of those questions into the chat, and I will be more than happy, like I said, to answer those. Of course, if you are new to the channel, make sure that you do subscribe and turn that bell notification on, and make sure you smash that thumbs up button, or that heart button if you're watching over on Twitter as well. Because it does really help me out, it helps the channel out, and I can continue to bring this content to you as well. But yeah, enough of that. Let's jump into the charts and kind of see what's going on, right? That's what we want to know. We want to know what's going on within the markets. We want to look for the next best trade setup, because at this moment in time, I am in no active trades. Okay, I have been trading this range, extremely well, extracting some really nice profits out of this range, and yeah, at this moment in time, I find myself in no trades. Does that mean that I need to be in a trade and I need to rush to find a trade as quick as possible? No, absolutely not. Okay, absolutely not. I'm waiting for the best possible trade setup. Once that trade setup presents itself to me and I see everything that I want to see to enter into that trade, then and only then will I enter into the trade. I'm not giving into FOMO. That is the first way, or the quickest way to lose money, right? Giving into FOMO is the quickest way to losing money. So yeah, if you want to lose money, then give into FOMO, right? For me, I am waiting for the next best setup. Okay, we can take a look at previous trades that I've taken on this 8-hour range. Okay, just bringing these up, right? And you can see how many trades are there here. There's one, two, three, four trades there. These are 4 out of the many trades that I've taken within this range. Okay, these are just some of the favorite ones that I've saved, because I want to make a video specifically on these, because yeah, they're really good examples and textbook examples of really good trade setups that I take on a daily basis, right? But yeah, these are some of the trades that I've taken within this range, and these have been the highest probability trade setups, right? These trade setups have been the highest probability trade setups, and yeah, that is pretty much all I take here, right? I only take the highest probability trade setups. If I see a low probability trade setup, I'm not taking it, right? I'm not taking just any and every trade, right? I'm looking for the best setups, right? I'm looking for the best win rate, right? I am looking for, to have that high hit rate, right? That consistency, right? Consistent profits, okay? Now, of course, I also like to have tight stop losses as well. Okay, and I look for price. To be honest with you, I like to look for like a 1 to 3 risk to reward ratio. That's what I kind of like to look for within trades. At the same time, having a high hit rate as well, having a high win rate. Now, you can be a profitable trader with a hit rate or a win rate of 50%, as long as your risk to reward ratio is at a minimum, okay, of a 1 to 2, right? A 1 to 2 risk to reward ratio. For me, I like to try and extract as much profits out of the market as possible. So, I have a high hit rate, right? I use a strategy that I know has a high hit rate, high win rate, by looking for the highest probability trade setups. But then also, I'm looking at these as more like swing trades as well, right? So I understand that my risk to reward ratio is pretty good, right? You can see what the risk to reward on, 4 of these trades that I've taken within this range. Okay, you can see the risk to reward on this long here was actually a 1 to 7. Okay, the risk to reward on this short was actually a 1 to 7 again. Was that on? Actually, no. Let's It was a 1 to 13. That was a 1 to 13 risk to reward ratio. And then here we had a 1 to 3, well, 1 to 4. Okay, we had a 1 to 4 risk to reward ratio on that one. This one, I was looking for a little bit lower on this trade. Okay, so I was looking for like a 1 to 5 risk to reward, but it ended up being just like because of course I was taking profits on the way down, right? But it was a 1 to 2.5 risk to reward ratio. Okay, so you can see here, I like to have those high risk to reward ratios, and of course strategies that I'm using as well. They have high hit rates, they have high win rates. Okay, and I'm looking to do that over a consistent period of time. Okay, and by doing so, okay, this is what you can achieve, right? This is exactly what you can achieve: consistent profits. Am I a 100% profitable trader? No. Okay, nobody is. No trader is ever 100% profitable. Okay, you're going to take losses here and there, but you can see my biggest loss is $760 in comparison to like one of my biggest wins, which is $5,600. Okay, so you can see that just very, very managing my risk very, very well, and that's kind of what I like to do here. Just like talking about this, right? Looking for those highest probability trade setups. That's what I talk about. And then I talk a lot about managing that risk properly as well. Okay. If you're not managing the risk properly, there's no way that you can become a successful trader, right? But just sort of wanted to start off with that. Just reminding you guys of the important things, okay? Because everything that happens within the charts, okay, of course it's important, but it's only important if you're using it in conjunction with other things, okay, such as risk management, okay, risk to reward ratio, right? If you're using the charts in conjunction with stuff like that, okay, then right, it's just absolutely amazing, and you can just the sky's the limit, right? The sky is the limit. But if you're just focusing on the technicals, you're not looking at your risk management, you're not looking at your risk to rewards, that's when it can get messy. Okay, and vice versa as well, right? If you're just focusing on the risk management side of things, if you're just focusing on the risk to reward side of things, and you're not looking for the highest probability trade setups, then you're in a sticky position as well. Okay, you're in a sticky position there as well. So combining all of those things, the sky's the limit. Okay, if you're just implementing, half of them, okay, then you're in a sticky situation there. But let's dive on into the charts and let's see what is going on, right? So zooming out, okay, I've been talking about this channel for how long now? Since like the 22nd of March, okay? I've been talking about this channel here. talking about this, or yeah, initially we were viewing it as a bit of a smaller channel, okay, but it has over time increased, of course, after we long this, right, and then we long this here as well. The range has, of course, got bigger. But this is really nice price action to be trading, right? This is just amazing price action to be trading. And yeah, we've like I showed you at the start, right? We've taken some amazing trades from this range right here. And for me, there is no reason to stop trading this range. Okay, there is no reason to stop trading this range because there have been so many amazing trades. And what I say, like to say a lot of the time as well, is literally just trade the range until that range breaks, whether that be to the upside or towards the downside. I don't care. Trade the range until that range breaks. Okay. And of course, you want to be on the right side of the market as well. You want to be in a position where you can profit off of that range break as well. And that's why I talk about a lot as well. When I enter into a long trade here, I will take profits along the way up, but I will always leave just a little bit left in that trade just in case we do get that range break towards the upside, because of course I do want to take advantage of that if and when it happens. Okay, so that is what I'm looking for. So yeah, I'm gonna continue to trade this range, right? I am gonna continue to trade this range, and I have talked a lot about a possible long trade from $56,500 approximately, okay, down here. So from the range low, I am very interested in taking a long trade from here. Very interested. Is it set in stone that I'm going to take a long trade from this level? No, it's not, right? It's not set in stone that I will take a long trade here, okay? But I understand that there is a high probability that retail traders will be getting wrecked down here because they will be giving into FOMO. They will be trading a breakout, okay, which of course, as you know me, I absolutely hate breakout trading, right? I think the majority of the time, let's say, I actually counter trade breakouts, right? That's pretty much what my strategy is, counter trading these breakout traders, okay? And you have to think about it logically, right? You have to think about it logically, right? Entry, you kind of want to think about it logically, right? You want to enter where the obvious stop losses are, okay? You want to enter into a trade where obvious stop losses are. I want to put my entry where the masses, okay, put their stops. Most people will put their stops at very predictable places, so you can predict it quite well, right? That's with swing failure patterns, with failed auctions, okay, and then looking into the footprint software, okay, and the open interest, using all of these things in conjunction with each other, okay, give you those very powerful trade entries. Okay, if you're an institutional trader, your job is to generate that liquidity, to get into a position, okay? Because as an institutional trader, you can't just press a button like retail traders and enter into a trade, right? You have to generate that liquidity, okay? So the market makers, okay, they don't really know where stops are, okay, or they just don't really care or can be bothered to find where your stop loss is, right? They're not out to get your stop loss, okay? That's not, what you may think they are, okay? But they're not out to get you, right? They just understand where that liquidity is sat, right? And for big institutions to get into trades, right, they need that liquidity to get into the markets. Okay, that's what they need. And most people will put their stop losses like a tick or two below the previous low. Okay, and invariably the market will go to where the obvious the stop losses are, over and over and over again. Right, we see it so many times, okay, where the market is just drawn to that liquidity. The market is just drawn to those stop losses, right? And that's exactly what I take advantage of here, okay? And that's what I try and teach you guys to take advantage of as well, right? Taking advantage of the stop losses. Okay, so a very important rule is to look for entries at the obvious stop losses, right? That is exactly, what I do. Okay, just looking for the obvious stop losses okay, where that liquidity is, right, where the institutions are looking at getting into the trades, okay. And once I see, a cascade or a sea of stop losses, right, when I see, okay, a sea of stop losses getting triggered, okay, then I know that that is the right time to get into the market. Okay, now there's like two levels with it as well. Okay, and I'm saying this right because I want to follow on with something that's happening within the charts. Okay, so this is very important, right? Because this is, something that I'm going to be, a trade that I'm going to be looking at getting into in the future, right? And it all stems from what I'm talking about right now. Okay, it all stems, right? So, yeah, it's easy to see where the stop losses are. Okay, once those stop losses are set off, because we know that liquidity is, price is drawn to liquidity, and we see, okay, a sea of liquidity, okay, it gives the institutional traders like an opportunity to get into the market, okay, an opportunity to get into the market, okay, and yeah, that's what I like to look at here, and I call here, okay, absorption, right? That's what absorption is, right? And that's when there is a massive stop losses, okay, the price gets drawn to that liquidity. What happens? Institutions are looking at getting in where those stop losses are, okay? And when those stop losses are triggered, right, what happens? Let's say it's a long trade, right? When a long trade stop loss is being triggered, okay, if a long trade stop loss is being triggered, that means that those long trades are now selling back into the market, right? Who are they selling to? Well, they're selling to the big institutions, they're selling to the big players, they're selling to the big traders that have a lot of money, okay, who need liquidity to get into the market, right? That's who they are selling to, right? They're selling to the smart money, okay, let's call them. They're selling to the smart money, right? What happens when all of the stop losses have been triggered, right? Okay, and all of the sells into the market have been absorbed. What happens? Okay, price tends to rise, and on the vice versa as well. Okay, it works both ways. Okay, so if you know all retail traders are shorting, they have their obvious stop loss above the high. Okay, a tick or two above the high, right? Price gets drawn to that liquidity. What happens up there, okay, is we get a sea of liquidations, okay, which offers a huge pot of liquidity for the institutions to get in, right? The institutions then get in, they are absorbing, okay, because of course the institutions are looking at getting into a short or a sell, okay, and what we're seeing is that those short stop losses getting triggered means that they have to buy back into the market, okay, so they're buying back into the market, which is of course pushing the price higher, okay, but then price fails to go any higher, okay, price, goes above the high a little bit, right, but not an excessive amount, okay, because what is happening? Well, all of those buys are being absorbed by the by the institutions, by the big traders, by the big whales. Okay, they are absorbing all of that as it's coming in. Okay, and it's like it's like a ceiling, right? Price is trying to push, but it's not. Okay, it's not working. They're not pushing through because on top, okay, is a lot of capital, right? That is just weighing that price down. Okay, as price is being weighed down, eventually, okay, there's just eventually all of those stop losses will get triggered, okay, and then there's just no resistance, right? There's no resistance for that for the big traders, the big institutions to push the price lower, okay? There's no resistance. So what will happen, okay, is price will just drop, okay? Like I said, it will work both ways, right? There are many examples, okay, and there's of course, if you're on the Visionary Discord, there are many examples of this, right? There are many examples that of trades that I take of this, right? So many examples, okay? And yeah, like to just like show you one example here, right? There was a previous short trade from up here. Where are we? Where is it? That one there? Yeah. right? This is exactly what happened up here. Okay, exactly what happened back up here. I wonder if I can get it on Exo charts as well to show you, right? Because I'm actually trying to like educate you here on how markets work. I know there's a lot of there's a lot of people out there that just don't understand how markets work, and I'm here. I'm like really trying to teach you how markets work. And it may seem complicated, right? It may seem complicated, but what you have to understand, right, is that this is what moves markets, right? This is what moves markets. If you really want to become successful in trading, okay, then you need to understand things like this. This is what you need to understand. This is the bread and butter to making money in the markets, not silly triangle patterns, not silly head and shoulders patterns. Okay, I don't trade silly patterns like head and shoulders, reversal patterns, because the risk is, a mile to make like half a mile. Okay, like textbook in the textbook definition of head and shoulders is great, whatever. Okay, but when you put it into practice, okay, it's not great, right? Because yeah, like I said, you're risking a mile, okay, to make half a mile. It's just not good risk management wise. Okay, it's just really not good risk management wise. Now, I was going to talk about this short here, okay, and just use that as an example, but Exo charts will not go back that far. So I'm going to re-pull this, and we're going to look at the long trade that I took from here. Right, so I took a long trade from $59,338. Right, so we'll talk about this. Right, what happened on this move down? Okay, I've actually forgotten what happened on this move down, but what I can tell you is that shorts were opening, open interest is increasing, okay, and then what we see, okay, is price comes down to this major level of liquidity right here. Why is it a major level of liquidity? Okay, well, there's going to be a mass, okay, a mass of stop losses here, right? There's going to be a massive stop losses here. You can't visibly see it, okay? You can't visibly see it, and this is why I say, like, um, market makers, big institutions, they're not out to get you, right? Because they don't know and they don't care where your stop losses are. They just know where they're not out to get you specifically, right? They just know where they can get into the market, right? They're just looking for a place to get into the market, okay? And they understand that stop losses are, okay, a very, very good opportunity to be getting into the market, right? So what did we see here, right? What did we see? Okay, we saw price here pull down into this liquidity area. Okay, you also have lots of liquidity that's going to be sat from these lows here as well. Okay, so there is lots and lots and lots of liquidity down here. Okay, again, perfect for the institutions to get in, right? The big traders to get in. Okay, and yeah, like I said on order flow, right? It's not like the great example because I can't show you further back. But yeah, initially, right, we can see that price is decreasing, right? Price is initially decreasing. I would like to show you what was going on here as well. But initially, right, price is decreasing. Okay, price is decreasing all the way down. Yeah, all the way down here. Okay, and as that price is decreasing, we're seeing the open interest increase. So we know that these shorts that are coming into the market are new short trades, right? They are new short trades. So initially that is a strong a strong move down, okay? But then we start to see a bit of a weak move down here, right? And why do we start to see a bit of a weak move down here? Well, right, all the way back here, and I wish I could show you, but I can't. You just have to take my word for it, okay? There is a very large amount of stop losses here from long trades, right? So anybody that has like longed here, okay, longed here, right? Just longed anywhere in this area here, okay? A lot of their stop losses are going to be below this low right here. A lot of their stop losses will be below this low right here. And what did we do? We took out that stop loss, okay? We took out all of those stop losses, okay? So there was a sea of liquidity there. We took all of that liquidity out. Okay, and we know that, right? We know that stop losses got hit because, right? What are we seeing? We're seeing negative delta here, okay, meaning that sells, okay, these are sells, right? We're seeing sells into the market, right? What do we have here? We have 69 million, right? We have 69 million right here, okay? And what is happening on the open interest is that the open interest is decreasing, okay? So the open interest is decreasing, telling us that people are, money is leaving the market, right? So when money is leaving the market, what does it signify? Well, it signifies to us that long stop losses are being triggered, right? And we can use the confluence with the order flow with the trading view analysis, okay, with this trend line that we've drawn here. Okay, there's no need to overcomplicate it. There's no reason to overcomplicate things, right? You just need to keep it very simple. Okay, very very simple. And what you can see here, okay, is that as price is coming into this level, we have, right, we have longs leaving the market, right? Longs selling into the market. We can actually probably pull up the net longs, and there you go. Okay, there you go, right there. We had 137 million, okay, long trades leaving the market, right? Did we have any short trades opening up there? Not really important. But yeah, okay, here, right? So we had 137 longs leaving the market, but then we had also 96 million shorts leaving the market as well. So that was like smart money taking profit. Okay. But what we're not focused on the shorts at the moment. Okay. We can see 147 million, 137 million longs leaving the market. And then here we have 147 longs leaving the market here, 155 million longs leaving the market here, 156 million longs leaving the market here, right? So you've got a lot of longs, right, leaving the market. Okay, meaning that their stop losses are being triggered, right? As these stop losses are being triggered, okay, you can see that price has actually had a rise towards the upside. What does this rise towards the upside signify? Okay, well, this signifies, right, this rise and this failed auction that formed here signifies, right, that the institutions, the large traders, the big traders, okay, have absorbed all of that selling into the market. Right, they've absorbed the selling into the market. They've absorbed all of those long stop losses being triggered. Okay, this has now, right, given institutions liquidity to enter into the market. Right, so what are institutions doing now? Okay, they're entering into long trades here. Right, we can visibly see they are entering into long trades. Well, I say visibly see. We can't visibly see them or like physically see them entering in to a long trade. We just understand that that is what is going on, right? We understand that that is what is going on because we understand, okay, that there is a sea of liquidity here with a sea of stop losses, okay, long stop losses here, right? As that level gets taken out, okay, we can like visibly see on the order flow, right, that longs are closing, okay? We can visibly see that longs are closing, meaning that they are selling into the market, right? They're selling into the market. You can see it on the open interest here. You can see it, 60 minus 69 million negative delta, open interest decreasing. Very, very easy to view. Okay. So we know that longs are exiting their position, right? But price is not, going lower, 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 lower. Okay. You're not, we've got mass, like, you have mass shorts coming in here. Okay. But then here you just see those longs closing, right? Those longs hitting their stop losses, okay? But then price starts to move towards the upside, right? So that in itself could offer a very aggressive long trade, right? For me, I'm not very aggressive on my trades, right? I'm just aggressive, right? So then I start to see price rising, and this is when I'm looking to enter into the trade, okay? Because I understand that institutions, big traders, have absorbed all of this selling pressure, okay, but plus all of those stop losses being triggered here as well, okay, where from there I'm looking to enter into a long trade and I'm looking for price to go higher. Why? Because I know who makes money in these markets. I know institutions make money in these markets. I know big traders make money in these markets. So I want to be doing what those big traders are doing. If I visibly see, and I say visibly see, but if I come to terms with with my own opinion that okay, because all of this is opinion based, right? all of this is opinion based. This is, my opinion on the markets. But, okay, how I see it is that this is what is happening, okay? And in theory, it is what is happening, okay? It is what, not every single time, okay? Because of, well, I say it is every single time, right? But it's not going to play out perfectly every single time, because institutions don't win trades 100% of the time as well. Okay, institutions do take losses here and there as well when the retail traders, okay, are too powerful for the institutions, right? That's when institutions will lose money. Okay, and there are times and places where that does happen. Okay, but the majority of the time, we understand that institutions are the ones that make the money. It's just simple common knowledge. Okay, institutions have been around for years, decades, right? Why are they still around? Because they know what they're fucking doing. Retail traders don't know what they're doing. Okay, that's why retail traders are give up after a few months, okay, or a few losing trades. They give up, right? Because they don't know what they're doing. Institutions have been around for so long because they know what they're doing, right? They know what they're doing. They don't care whose feelings they hurt, right? And that's how you have to think as a trader as well, right? I understand, okay. I am entering into a trade off of the back of millions of people losing money. Okay. You have to be selfish in this. Otherwise, you're going to be one of those million people that is losing money in the market. Okay. You have to be selfish in these markets. Yes, it's a bit cruel. Okay. I'm taking advantage of people getting stopped out. Right. And that's pretty much how I enter every single trade. That's literally how I enter into every single trade. Right. People getting stopped out. Okay, I wouldn't say every single trade, but yeah, the majority of my trades are entered into off of people getting stopped out. Okay, so I am taking advantage of people getting stopped out, but that's how the institutions are doing it as well. Okay, so you want to be trading like the smart money. So I just really want to educate you guys on that, right? Just really educate you on that. Of course, we do have all of the ExoChart templates. ExoChart courses out now. So yeah, on the visionary courses, we do have all of those out. Well, I say all of them. There is still more to come, right? There's still a lot more to come as well. I want to make some more relaxed ones as well, where I'm just maybe doing something like this. And just being really relaxed and talking about it, okay, and just going over loads and loads of examples, right, live examples. So yeah, all of that is out. If you of course want to learn, kind of like how to capitalize and how to extract profits from the market using software like ExoCharts. First link in the description will take you to this page here, and of course it gives you access to the Visionary Discord and the templates. You get the templates there as well, but the Visionary Discord as well, where I give all of my trades away. I'm updating on what's going on within the markets as well, right? There was a really good example. Where was it? Yeah, 22 million new long trades coming in. Okay, what happened to those long trades? Okay, those long trades started to become underwater. Okay, meaning that they were trapped traders. What did I do? Well, I took a short trade. Okay, I took a short trade there. How did that play out? Well, yeah, as you can see, that played out really well. Came down to the TP1, took a TP1 there. Okay, then we came down all the way to that TP2. Okay, as you can see there, we tapped that TP2 literally to the dollar, made some really nice profits on that trade. Okay, so I am visibly seeing where where traders are entering into the market. I can see 26 million new long trades coming into the market here. Then when price starts to pull back, okay, because we're seeing these big institutions absorbing these 26 million new long trades, okay, then what do I expect? Okay, I expect lower prices, right? Because we then have 26 million new short trades that are trapped. We also have the institutions that have absorbed the 26 million trades, right? They have absorbed that that buying pressure, okay, and they are pushing the price lower, okay. And then here comes the retail traders who stupidly longed the breakout, right, and are getting wrecked now and have to cover and have to sell back into the market, pushing that price lower, adding fuel to the fire. Okay, so in essence, it's a pretty horrible market because institutions kind of rely on retail traders and their stop losses, but also, okay, retail traders entering into their trades and then getting wrecked on their trades as well. It's a bit of just a cruel world, right? But that's the world we live in, okay? And that's what you need to understand. You need to be selfish. You need to be pretty horrible, okay? You need to be unconsiderate for other people in these markets. But that's how you make money in the markets, because that's how the markets work, right? That's what you're getting yourself into. Okay, that's what you have to understand when you're getting into this market, right? You have to be selfish, and you know, a lot of the time, right? People that are selfish are actually very, very good at extracting profits from the market, right? Of course, it's not a necessity at all, but like, if you think about it, right, you have to be selfish in these markets. So someone selfish, in theory, would be good in these markets. But that's what you have to be. You have to learn that selfish mindset. You have to learn, not necessarily learn, because, well, of course, you have to. What I just said, you have to learn that, right? But I was going to go on to saying you have to learn how to think like a retail trader, but you don't really have to learn that, because you go through that stage, right? You go through that stage, and then you learn to look back on that and think, oh, that's what I would have done, but this time I'm going to do this. That's how I go through entering into trades, right? Because I used to long breakouts, right? I used to long breakouts, and I would get wrecked on trades, absolutely wrecked on trades. But now I'm doing the vice versa. Okay, so 2, 3 years ago, I would have been shorting this. I would have been FOMOing. I would have been, oh my god, we're going down. We're going down to 20k. Right? That's not the case, right? Because what is happening is that stop losses are being triggered. We are getting long trades covering. Right? They're selling into the market, or they're getting liquidated, whatever it may be. Okay, then we're getting the big institutions gobbling up that liquidity, right? Entering in with that liquidity, okay, absorbing all of that selling pressure, okay, and then it pushes that price higher. Okay, very simple, but just so effective. This is how markets work, right? This is the bread and butter of how markets work. Okay, this is, I don't know how many times I need to say it, this is how markets work. Okay, if you're looking at silly triangle patterns, if you're looking at head and shoulders patterns, expecting it to play out, then I can promise you now, you will not get anywhere, because that's not how markets move. Markets do not move because you get a breakout of a level, right? Market moves because of liquidity. Market moves because of what traders are doing. Okay, if traders are longing a breakout, okay, institutions absorb all the longing, okay, and price reverses, okay, then all of those longs become trapped. They have to cover, okay, because they're not going to be able to be in a long trade as price goes down, right? They're going to get stopped out at some point, or they're going to get liquidated, right? What does that mean? They have to sell into the market, adding fuel to the fire, pushing the price lower, right? It's very, very simple, but very, very effective, right? It's common knowledge, but 95% of the market does not know it. It's common knowledge, and 95% of the market does not know it. 95% of the market doesn't actually know how the market works. Yeah, it baffles me, but I understand, right? I understand, because I was in that stage, right? When I first got into trading, I didn't know what the fuck I was doing, right? I was just going off of what these influencers are saying, okay? But yeah, you learn over time, okay? And it's always helpful to have someone there, to guide you, to show you how markets work. And that's, what I'm trying to do here, show you how markets work, right? Markets move because of liquidity. Market moves because of, the bid ask, the important information that is coming into the markets, right? The numbers, that's why market moves, not because of a silly breakout. Of course, if you've got any questions, put them in the chat and I will be more than happy to answer them. But yeah, if there are no questions, I may leave the live stream here. I just kind of wanted to make it a bit more of an educational live stream. because nothing is going on. Like I said at the start, right? Um, America, they do have a holiday, market is closed, nothing going on. Yesterday's live stream, I talked through the trades that I'm interested in. Of course, locally, right, and on the smaller time frames, I'm not interested in any trades here. Really, I'm really not interested in any trades here. I mean, there were a few semi-decent trades, right? So there was a long trade from here, a little long trade from here, which, to be honest, yeah, wasn't a great long trade. But then there was also a long trade from down here as well, which would have been quite good. There was a short trade. I'm just not really interested in day trading this at this moment in time. I'm looking for the highest probability trade setups, and yeah, at this moment in time, I just don't see them locally. Anyway, I see them right on the higher time frames, right. I'm looking for a short from all-time high. Okay, I'm looking for a short trade off of all-time high, and I'm looking for a long trade off of that sweep of liquidity at the range low. Okay, of course, it's not set in stone that I will short or long either one of these levels. Okay, so long the range low or short the range high, it's not set in stone that I will do that. But just going off of my statistics and going off of my experience, I really wouldn't be surprised if I see the things that I want to see at those levels to enter into trades, right? Because I know how retail traders trade. I know how retail traders think, and yeah, it's yeah, unfortunate for them, but yeah, of course, they don't put the time and the effort into actually understanding how markets work. So it's their own fault, to be honest with you. So yeah, any questions? If there aren't any questions, I'll probably leave it there. There's just absolutely nothing going on today. Of course, as well, if you're new to the channel, subscribe. If you haven't, if you haven't liked the video already, please make sure you smash that thumbs up button as well. Um, but yeah, I hope you've enjoyed my little rant. But yeah, I just again, I'm here to I'm here for your benefit, right? I'm here to show you how these markets work and how to kind of like trade like an institutional trader, right? That's exactly what the goal is here, right? To trade like an institutional trader, um, because they are the traders that make the money in the markets, right? They are the traders that um, move the markets. They are the traders that have longevity in the market, right? So yeah, very very important that you have that mindset of what a retail trader, sorry, what are institutional traders doing, right? What are they trading? Where are they taking that trade? Okay, and then again, on the other side, you need to have what are retail traders doing? Okay, what shouldn't I do because retail traders are doing that? But yeah, okay. If there are no comments, then if there are no questions or anything, then yeah, I will leave it there. Just wanted to keep it a little bit shorter today. It's still quite a long live stream, but yeah, I just wanted to keep it a little bit shorter, a bit more like educational, right? Because yeah, just nothing going on today, nothing too important to update anybody with. So yeah, thank you very much for watching, everybody, and yeah, I hope you have a lovely rest of your day. I'm looking forward to seeing you in the live stream tomorrow. It is Thursday tomorrow, then we have Friday, and then of course the weekend again. So yeah, I will see you guys tomorrow for the next live stream. Of course, if you want access to the Visionary Discord and the daily market updates, first link in the description, second link for the free Discord. But yeah, that is all from me. Thank you very much.